Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over that sideways and down action on the Bitcoin chart. And if we do see what is the catalyst for that, it is probably that the CME group is projecting about 99% chance of a Fed interest rate increase tomorrow. So please be aware that the Federal Reserve will be giving out new interest rates tomorrow. And almost 100% of the market believes that it's going to be 25 basis points. If it's 50 basis points, it could tank the market. If it's less than 25 basis points, in other words, if they don't increase rates, then maybe the markets could even pop. Let's just go straight to the charts here, and we can see that, of course, we still are in these bull markets that do occur above the Bollinger Band's midline there. However, we're also nicely above the 200 EMA on the weekly, which is usually a good sign for this asset class. Guys, we don't break down from there unless we hit around 26,000 or below, and we do have a nice historical range that could bring us all the way up to the mid 30s to perhaps even the low 50s, guys. So again, there is considerable upside potential, and I would say that probably the bottom is in. I know a lot of people want to see the legs kicked out from under this market, but as I've been saying since perhaps November to January, I do think that the lows are in and it should have been time for bull market planning. That doesn't mean that altcoins are going, but of course BTC is. Guys, let me just delete some of this stuff on my screen and let's drop down to the daily just for some updates here. And what we can see on the daily is that we do have a nice historical range here in this type of a setup for a potential pop all the way up to 33,000 or a continuation drop down to 28.5. However, we do have that critical support on the 200 daily over here at 27,000. So all of that I think is fair game depending on what goes on in the market. And if we do just throw on the of course, that structure that I did want us to be aware of, you can see that we are at the limits, okay, of that broadening wedge that I had drawn out for us. And if I just pull this across, you can see that we are starting to get a little bit of a bounce. So if we do get good news tomorrow, this could act as like a springboard that just launches us all the way to the top of this range. And you can see that the top of that range is in that $32,000 to $33,000 area. And then, of course, if we lose this range, then on a daily basis, we could be talking about just retesting the underside and then perhaps going for a fall to grab some liquidity even into the low 27,000s, as I've prepared you for several weeks now. This, of course, does correspond to the weekly and the 2-week volatility pivot zone, which I have told you several episodes is approximately the $29,000 to $28,400, $28,400 range. And should we be able to recapture that range, should we go for a dip, let's just say something like this, right? It's kind of like go down here, gets kind of scary, and then we're able to recapture this pivot zone. I am going to consider that to be a strong buying opportunity. You don't necessarily want to buy here if you're risk adverse. Of course, you could with clear stop losses and your own risk management, but reclaiming these levels, reclaiming this diagonal here, reclaiming that pivot zone, reclaiming that weekly Bollinger Band's midline in this area between that 29 to 28, let's just say 500, that would be a strong signal and a front run to potential more bullishness. So just pay attention to that zone. It may be an opportunity as opposed to the crisis that everyone's trying to make it out to be. Let's go ahead and just explore the previous levels that we did show here. And of course, we were calling for either a break above 30,286 for that continuation upwards, or we were going to lose the pool, lose the pivot, and we did around 30,000. And then breaking under the underside, you can just see how this candle just dramatically dropped. Now we are having a mean reversion to try to grab some of this liquidity here on this drop candle, but you can see on this pump candle over here, we do have a lot more liquidity to claim. So if we do drop to 27 and just continue onwards, again, this is the big money over here. This is just going to be a little bit of a potential bounce should we be able to get that. So I would just stay cautious and stay frosty there. Now for our updated levels on the daily, you can see because of this drop candle, we do have a considerably large range, and should we reclaim above 29,300, I would consider that we are recapturing some of our momentum, and then that would be confirmed around 29,873, where we could have potential continuation to the bullish control zone at 31,316. But should we lose the pool and lose the pivot, then we are going to actually lose the strength of the move to the upside that's been part of this entire area here, and that would suggest further continuation to the downside, front running the bearish control zone at 28,700. Let's go ahead and just take a look at this for the 6 hour. Should you be not trading on the daily but on the partial days, then you can see same thing over here. When we were giving the previous levels on the last episodes, you can see that this pool right here, this green line, these two green lines here that formed the pool, that was suggesting the line in the sand. We did have a nice fake out over here, which is what market makers tend to do to try to liquidate stop losses before moving price action in a direction. And you can see we weren't able to hold the neutral point of control, which does suggest that bears remained in charge because we weren't able to hold that neutral point of control. Above it would be bulls, below it would be bears. So that means that bears had the advantage. We fell again below the pool, below the pivot, and then you can just see just catastrophic drop right to that trend line that I had drawn out for you guys. So again, if you guys here at Alpha Commission took that trade, then you guys are absolutely killing it. Now we have had a little bit of a mean reversion there, but here on the 6 hour, we did lose the 200 EMA, and that's usually very difficult to recover from. So I'm not really just counting on upside, but I would be considering perhaps sideways or down for is a greater possibility, at least on the 6 hour here. We'll see how the day plays out with the Federal Reserve. Now, if we do just get some type of an updated pool, you can see the critical level that we do have here, which is to stay above 29,129. That'll be our pivot that gives us a bias to the upside. And then the pool there for that potential, a greater reversion to the upside would be above 29,263. But just pay attention that we don't capture that neutral point of control until 29,666. So lucky number there, guys. I think that's going to do it for your update, guys. Just stay frosty for that Federal Reserve meeting. The interest rate hike above 25 basis points could be catastrophic, and no increase could actually send markets pumping. So that's your alpha for the day. Stay safe and happy trading.